Good afternoon, everyone, and welcome to the Daily Volatility Box report for December 30th, 2019. We are TOSindicators.com, home of the Volatility Box. In today's video, we'll start by taking a look at the indices. We'll take a look at the S&P, the Nasdaq, the Dow, and the Russell futures, and then use that to help us assess which was the more volatile market. We understood the volatility was going to be larger than usual starting the morning, and so where we could have spent our attention, or focused our attention rather, in terms of both futures markets as well as some stock trades. So we'll start with the S&P, and if we take a look now just at these four markets as a whole, we can already see that the Nasdaq was the only one that gave us the likely trending down signal, and this is on the conservative volatility box. We're on the conservative across the board since we breached all the aggressive volatility box clouds. And so using that, the Nasdaq was the one that still showed to us very easily and very clearly that it was the more volatile one. We had this likely trending down bubble before we did end up proceeding to bounce up from there, but we faced that bounce in the Dow, the S&P, along with the Russell. But how do we actually measure this volatility? Well, if we take a look, you should very easily be able to tell that in the case of the Dow, we broke through the clouds. So really, the Nasdaq proved to us that it was the most volatile of the four markets. Then we can take a look that the S&P was also dragged down by the Nasdaq, but really that Dow tried to stay afloat for as long as it could before it ended up falling through. We can see that the S&P is really then the second one that we would attribute the volatility to, since it has the volatility that is carrying over from the Nasdaq. And that then leads us to rank the Dow futures as the third most volatile market. Now if we take a look at the Russell futures, we'll see that we actually held what would have been our volatility box clouds, and we ended up bouncing from there. And so the Russell was really the least volatile market out of all four of these on the conservative volatility box. So that now helps you not only make very easy decisions as to where you'd like to focus, but in this case, we saw that for almost all the tickers outside of the Russell, we broke through what would have been that volatility box stop outside of that first hour if this wasn't that first hour of the market, right? And so this to us is free information for anyone looking to trade a bit more aggressively. That yellow candle starts to become where you first look at entries. And in the case of the Nasdaq, that was right here. In the case of the S&P, that's that candle right there. Case of the Dow, we have this 3-minute candle right here. And then the Russell we see is the one that actually ends up holding that volatility box and giving you a really nice follow through to both your T1 and your T2. However, if you decided that, hey, you know what, we're starting to observe this increased volatility, we're on a conservative volatility boxes across the board here, you may have chosen to just focus your attention elsewhere altogether. And with that, we had then Crude that set up one entry today. Unfortunately, that entry did not hold. Crude ended up just dipping way below our clouds. And so if you use that 3-minute RSI candle test, then you're able to get Crude on the way back up instead of having your entries already triggered. For us, this was a stop out. However, there was a second trade, and this was in the copper futures. And with the copper futures, we ended up coming right into our volatility box entry line. And that gave us a beautiful short right back down. Where these levels then just continued to plummet, and we see that we didn't really get that copper switch with our RSI candles that we look for until right around this point where we had already broken past the volatility box clouds, then letting you know if you're looking to trade aggressively, this is your stop that you're using to trade against. Otherwise, you could switch on over to your conservative volatility box. Now, those were two alternatives that you could have spent your attention focusing on if you were still looking to trade futures. However, with stocks, we had a few other entries. We'll start by taking a look at Apple. And in the case of Apple, we see that Apple made a move perfectly to our volatility box cloud, and we ended up making it past that first zone where we start to look for a fade. However, Apple did close on that same sort of region between that first zone, which now adds Apple to that likely trending candidate list for the next day. If Apple ends up breaking above 294.18, especially in the first 15 to 30 minutes of the market open, then you know that we have a likely trending market in Apple, and 300 suddenly starts to seem like a very realistic target for Apple to start to hit. Another trade that we had was in Tesla. Now, Tesla's been one that's been on our radar for a while. It's respected our volatility box. Same thing happened today with Tesla. In the morning, you had the opportunity, the confirmation letting you know, once we went from red to orange to yellow, that it was okay to participate in Tesla and look for a move up higher. Tesla did end up giving you that move, and for those of you that are interested in knowing what this move actually represents, that's right around a 2% move, 1.85% to 2%, depending on where you got in Tesla, which is right around $9 on a $414 stock. And we can see how quickly that actually happened, right? This is a 3-minute chart. We can take a look after that yellow candle that first target was hit in about an hour, and then that second target, just if you were looking for a sort of follow through, ended up coming with an hour and a half into the open. So however you choose to then play this, whether you're looking to scale out contracts, scale out shares, whatever means the asset class that you've chosen to participate, you now have the luxury to be able to scale out, take profits, pay yourself, and then move your stop up to break even and see how high is high, and really just have a free trade that's on the house. And finally, we'll take a look at LK, which gave us an opportunity to short as it hit our volatility box clouds. Now that did happen after that 10 a.m. cutoff, but we can see even after that, once we had that RSI candle confirmation, we had a really nice fall through to what would have been our first target with a nice one-to-one risk reward where we were able to take out some profits from the market. So while the S&P, the Dow, the Nasdaq all proved to us in the morning that they were the more volatile markets, there were still plenty of other opportunities where we could focus our attention and look for profitable trading opportunities, which is what we ended up finding across our stock and futures volatility box outside of that crude oil futures trade. Hope everyone has a wonderful day, and we'll see you in the next daily update. Take care, everyone.